Well, this is the third budget in a row where it doesn't appear to have any life-changing, dramatic impacts on the average Canadian. But there were 4, 5, 6 things in this year's budget that are certainly noteworthy. Of course, the first being the phase-out of the penny, which is being phased out of physical circulation in the coming year. That'll be an interesting impact on our Canadian culture. Second, we have a tax bracket creep, which has been in the budget as part of the budget plan for a number of years. But what it effectively does is it raises the tax rate just slightly for the average Canadian. So the basic personal amount that is allowed before subject to tax goes up to $10,822, and the top bracket starts at $132,406. So tax brackets creeped by 2.8%, and just reminds us of the need for prudent financial and tax planning for all Canadians along the way. Something that many people will be impacting their retirement is changes to old age security and GIS. Both of these government programs are now going to begin a phase period where it'll kick in at age 67. So you don't have to panic if you're 54 years old or older. You're fine. So if you're born after 1962, you are going to see potentially OAS and GIS kicking in at a later age. And that's something that'll become more relevant to retirement planners in future years. The retirement or the registered disability savings plans have some administrative changes. If you have clients or if you're a disabled person, then you want to definitely look at some of those adjustments. All of them are really intended for a more sort of practical and fair administration of the disability savings programs. As far as small business tax planning, we saw 3 major changes in that arena. Nothing dramatically large, but significant changes. The first being tax planning around retirement compensation arrangements, RCA trusts. Definitely the use of levered life insurance in RCA trusts is coming to an end this year. Employee profit sharing plans. These have been another trust vehicle small businesses have used to work around Canada Pension Plan and do some income splitting amongst family members. These now are being shut down for the use of what are called specified employees, or in other words, owner-managers. They're going to become subject to a special tax on allocations from an EPSP trust that exceed 20% of regular salary. So what that means is the use of these trusts by owner-managers to income split or work around CPP now done. And finally, the group accident and savings plans, GASPs, another small business planning tool that's been used to really place critical illness insurance inside a corporation and get a good tax deduction on the cost of the premiums. That has now been shut off, and GASPs are only available for the use of disability insurance. So those are the brief overview of the changes in the budget this year, and please check out more information on our website for more details. Thanks very much.